And we are recording. So, hey, Mark, how are you?
Good. Ethan, thanks for inviting me on here.
Yeah, no
Sounds
problem. No
fun.
problem. We may have some other people hop on. We're also recording this. So, if anyone's watching afterwards, just feel free to ask some questions in the comments below, or just reach out to us directly. We're always happy to answer your questions. So Mark, today we are talking about first-time home buyers, just the home buying process, and we're going to be sending out the free home buyers guide. So we see Desmond that's on here, and anyone else that hops on, we're going to be sending out a free home buyers guide afterwards as well. But no, appreciate you guys hopping on today.
Yeah, thank you for inviting me.
Yeah. So
Thank you.
to kind of get started rolling, Mark, just some basic home buyer questions that we kind of get asked all the time. A lot of people want to know what do I need to do to start? Where do I need to start financially to even start? Whether that's saving up for a down payment, like what does a down payment look like, and like maybe credit, like do I need a perfect credit score? Like what? Give me the ins and outs of kind of what we need. So go
Yeah, I
ahead.
mean, first of all, you don't need 20% down. So many people think you need 20% down to put down. And so that's a lot of money. And so you don't need to do that. I mean, we have programs where it's 100% financing. And so we have first time home buyer programs as well. And so, yeah, that's the first thing I would tell you. But we'll go, deeper into that.
Okay.
And the other thing I would say is credit. That's another one. Regarding credit, everybody thinks they need perfect credit. You don't need perfect credit. And so again, I'll get into more, details on that as well.
Okay.
Um, but I think really, I think let's just kind of, start with the process. I think the
Yeah.
process is always a good place to start. It seems like, of course, they'll call you first and, inquire about a particular house. And so then, of course, you send them to me first. And the reason you send them to
Right.
me is so we can figure out, what they qualify for. And so, they might qualify for a $50,000 home. They might qualify for a $5 million home. We just don't know. And so, what I have to do is do some certain calculations to figure that out. And so the loan process is for me to have a really good understanding, of what their financial situation is. And then with that information, what I'm going to do is structure a loan, based on their financial information. I'm going to tell them exactly what they qualify for, what their payment would be, how much they need to bring to closing,
Right.
all those things. And so that's kind of, the process. And so of course I got to get their financial information. And so normally what I'll do is I'll either email them or text them, where they can actually go to my website. They fill out the application. I'll get a notification, when they start. I get a notification when they're done. And then what I'm going to do is, review everything. I'm going to try to figure out what loan program works best for them. And, a big part of my job, of course, is to educate my clients. And because they got to make sure they feel comfortable in what they're doing.
Yeah.
Okay.
Yes.
And so, once we kind of figure out what they qualify for and, go through the different loan programs, like I said, I'll exactly explain to them, what their payment is, how much they need to bring to closing, um, if anything. And so, again, there's
Yeah.
different, ways to structure these loans. And so, that's kind of the loan process, and that's what we call a pre-approval, the process, I should say.
Okay.
Once they find a house, then what they're going to do is they're going to, get us documentation like bank statements, W-2s, pay stubs, and then we submit that in underwriting. Typically, it takes like 6 hours, and so our underwriting process is different than other lenders, and the reason being is that a lot of times buyers, especially first-time home buyers, they have a lot of anxiety. Am I going to get my loan approved? There's a lot of money involved. And so one of the things that we do is we will get your approval, within 6 hours. And so once we get all your, your documentation from you, in order to submit it into underwriting, once we submit it, like I said, within 6 hours, we'll have that approval. So that just helps take, away some of that anxiety.
Yeah.
Um,
I don't think some people understand like how important that is too, to get your underwriting done early in the process, where I believe most banks and companies, they do that toward like the end of the transaction almost. Like that's one of the last things they do. And having that done at the beginning is just like super helpful. And like you said, relieves the buyer, and that way they know early on whether or not they're going to be able to follow through with the rest of the process.
100%, Ethan. And so, you're exactly right. I've been doing this 31 years this coming May, been
Mhm.
with 8 different mortgage companies, and everybody else does it differently than we do. And so, normally you're right. It's like 2 weeks in, 3 weeks in, that's when you get the approval. And so, we like to do that up front. And so it's kind of also a little unique in that we just get minimum documentation typically upfront in order to submit it into underwriting, because we don't want to over document the client either. And so, once it comes out of underwriting, then we kind of know what documentation we really need to ask the client for. So it streamlines the process, makes it, more a pleasant process, I would say, for anyone trying to purchase a house. But
Yeah.
anyway, so that's kind of the loan process that we go through.
Okay.
I think the other thing, what would be important for, first time home buyers, what loan programs, are available out there. And so, what I would tell you is that, we have, there's Home Ready, Home Possible. Those are very similar products. They require 3% down. You do have to be a first time home buyer, in order to qualify for those. And there is an income limit on those. Okay.
Okay.
And so then we also have a product called Home One. And Home One, again, it's for first time home buyers, 3% down. Um, but there is no income limit on it. And so that's
Right.
a great product. Then we also have a new product. Again, it's 3% down, but the income limit is much higher on it. And so this is actually brand new for us. And so they also get a much better interest rate with this product as well. And again, they do have to be a first time home buyer.
Okay.
And so, yeah, it's a great product. Again, 3% down. Then we also have, in the way of products, we have your USDA. And USDA, that's 100% financing. And
Right.
so, it's one of my favorite products. The other thing we have is, if we have a veteran or active duty, of course, we can do VA.
That's
With
100% financing,
Yeah,
right?
that's 100% financing.
100%.
And, with Movement Mortgage, we don't charge any lender fees either, which is great for our veterans and
Wow.
active duty.
Okay.
Yes, that saves them a lot of money. Um, and then, of course, we have FHA. FHA it requires 3.5% down. Great product. I did that for when I bought my first home. That's the product that I used. Um, with that product, you can actually go down to a lower credit score,
Mhm.
which is great. We can actually go down to 580 with that particular product. And so, but again, each one of these products have different guidelines. And
Right.
so, like I said, once I learn about their financial situation, at that point, I'm going to figure out what product's going to work best for them.
Yeah.
Okay.
No, I think that sounds good. And for some of our people that may be watching this, they might have and they might not be just a first-time home buyer. Maybe they've purchased a home before, and they might be in the case where they're needing to they're considering selling or renting out their current house, or they might be selling their house to buy another one and making it a contingent sale so they have more money to put down. There's lots of different scenarios, for those people that are buying their second, third, fourth, or fifth time home buyer. Like, is there anything that you would, I guess, what would my question be? So, is there anything that you would advise for helping those people that are going to be buying and selling at the same time? Like, as far as the finance side goes, is there any tips or anything that you can share that might help them out?
I mean, what I'm looking at in that situation, I'm trying to figure out, are they going to sell their house prior to buying the new house? And so would they take those proceeds to purchase the new house? How much proceeds do they have? And so I do those calculations kind of, what their net funds will be from selling the house. And then I'm going to kind of
Yes.
structure that loan based on, what they kind of want their payment to be, how much they want to put down. And
Okay.
so I look at that. The other thing I'll look at as well, maybe they don't want to put what we call a contingency on when they make an offer on a house, they don't have to have a contingency on there. And that just means that they don't have to sell their house first. They actually will qualify for the new house plus their existing house. And again, I'll run those numbers as well. And so in that situation, they're not going to be pulling their funds from, the sell of their house at that time. Most likely they have money in savings or investments that they're pulling money from for the down payment. Okay. And again, once I'm working with those, clients, Ethan, I got to figure out what's going to work best for them, in that situation.
Well, for most of you guys that don't know Mark personally, his other name is Dr. Mortgage. So, so he likes to. That's one of the ways that he comes in and saves deals, and that may be under contract. And I just wanted to make that plug for you because that's something that not many people know that you can do, especially if you're working with a professional like myself on the real estate side. And then if you're under contract on a home and just things aren't quite connecting, maybe you chose the wrong bank, or maybe it's a bank that's not connecting with what you're looking to do, then Mark can come in and I'll let him explain a little bit more on what this is, but he can come in and help save that deal. So Mark, do you have anything that you want to add to that?
Yeah, so back in the day, I had a realtor say I'm the, doctor of mortgages. I created a miracle, basically. And so since then, I've been known for being Dr. Mortgage. But what that basically means, kind of, Ethan, is exactly right. So if you have a sick loan, symptoms could be, lack of communication with your loan officer. Maybe your loan officer is asking for additional documentation. Maybe the loan officer is changing loan programs. Those are normal symptoms of a sick loan. And so that's when Dr. Mortgage comes in and will help you with, basically, giving you, some medication, if you call it, to kind of get things back up and running. And of course, we'll try not to miss that closing date. But I would say that we have an actual program. It's a rescue loan that we do. And it actually gets expedited throughout the whole process. And so, and that's how we normally can, make the same closing date. And so, but yeah, and the other thing is what we do normally is we give them a $500 lender credit. That's a coupon, which I think you have, Ethan, a couple of those.
I have a couple of them.
But yeah, so that's Dr. Mortgage. The other thing I want to talk, Ethan, about as well is, first-time home buyers, even, people that owned homes before, a budget, that is so important. A lot of people have never done a budget before. And so it's really important to do a budget. And so I have a worksheet. Of course, you can just Google, a budget worksheet and download it. But yeah, you're going to put your income in, you're going to put your expenses in, and, kind of what the new house payment is. And I'll kind of help you and walk you through that process. But, having a budget is really, one of the first steps, to be honest with you, because, I can tell you how much you can afford for a home. We have certain calculations we look at. But it's also important for you to do a budget, kind of figure out, what you feel comfortable with, and qualifying for a particular loan, not necessarily qualifying, but, actually affording, I should say. Yeah. And so, doing a budget is huge
Awesome.
as well.
Good to hear. Good to hear. Well, Mark, if you don't mind, I'll let you kind of take a breather. I'll kind of take over for a second, and I'm actually going to go through just kind of the home buying guide that I have that I'm going to be sharing with everyone, and and let me go ahead and share my screen with y'all so you just know what the process looks like from beginning to end, and beyond the transaction, because you got things like home warranties and everything that's going to come into play on what's going to help you. And you never know what's going to happen that first year that you might own that house. So having a home warranty is something where you can buy at the or have the seller buy for you during the transaction. And using that will actually you don't know what's going to happen the first year, so you can use that if need be, if you have any repairs that need to be done, or if you need to replace like your HVAC unit. You just don't know what's going to happen. So it's good to have that there just in case. So you have that warranty behind you. But let me share my screen. Give me just 1 second. All right. Can you guys see this?
Yes, I can.
Perfect. Perfect. So this is the Home Buying Guide's purchasing process. So as we kind of mentioned, The first step in any time that you would like to buy a home, you may reach out to me first. And really technically, if you want to call it the first step, is where you reach out to your real estate professional, whether that's me or if it's someone else that's local in your market. Then reach out to your real estate professional and talk to them about what their process might look like, because mine may be a little bit different than where you're located. So, but my buyer's guide purchasing process, this is the way that it looks for me. So the first thing we're going to do is seek a pre-approval letter. Now, this is something you would get in touch with Mark with, and you would talk to him about where your finances are. You'd submit some paperwork, fill out an application, and just see what you're being pre-approved for. Now, this process, and as he mentioned, this will show you how much your buying power is, and also it's a good time to talk with the lender, and the lender will know a lot more financial questions than I will. So talk to your lender about all the different options, the different loan options, what's going to be the best fit for you, and let him guide you as far as which one to go with. So once you get that pre-approval process, the second step is going to be picking an attorney. Now, I do this because North Carolina, at least, is an attorney-based state, and we use real estate attorneys to close on transactions. And this is in your benefit because the attorney will do what they'll have throughout the due diligence period. Once we get to that part, when we're buying a home, the attorney is going to make sure that you're not taking on any of that current homeowner's liens or anything. They want to make sure the title is clear, so that way when you purchase, you don't have any of that other homeowner's problems coming onto you. So they do their due diligence and they make sure the home is ready to go, and they help secure the insurance and everything else to help you with that process. So I just like to have all my ducks in a row. So that's the reason we put that as step number 2. So step number 3, this is the fun part for most people. And this is where we start going out and we actually start looking at houses. So this time frame kind of varies from person to person. You may have someone that is looking to buy something within a week, and we can, if it's possible, you can talk with Mark about this in person and or by phone, and he might have some programs where you can actually purchase a home. If you need to do it in under 30 days or 20 days, he might have a program out there that can work for you to close that quickly, because they can sometimes expedite the process. But back to the guide, finding a home, I always tell people, you'll want to narrow this down, pick maybe 2 or 3 neighborhoods that you would like to live in. And when I say neighborhoods, this could also mean, you could choose 1 or 2 or 3 cities that you have a general idea of where you'd like to live. Now, you'll want to think about like your commute to work, think about how far it might be from friends and family, the shopping, if you need to be near a medical center, think about how close that may be. There's just a lot of factors to take into consideration when you are looking to purchase a house. And once you do find that home, that's where we start moving forward and we start negotiating on the house. Now, this is where I come into play. I've been trained by one of the top 3rd real estate teams in the nation. And I'd like to think of myself as an expert negotiator, and that way we can get you the best price for that home, no matter what. And there's more than just purchase price that you're going to be negotiating. You have terms such as due diligence fees and earnest money deposits, and the seller might be looking to close sooner, and they may be willing to sacrifice on the price a little bit if you're able to close in 2 or 3 weeks, where other buyers would need 30 or 45 days. Now, it's just all about negotiating, and when we get to that step, then we can talk about that a little bit more in detail. But once we do come to terms with the current seller, that's when we'll move forward. We'll put it in writing. We'll send over the contract, and the sellers will sign it. Now, it's not a leak. Just so everyone knows, you may hear back verbally that the contract has been accepted, but it's not actually a legally binding contract until both parties have signed the contract. So in writing. And so just keep that in mind kind of when we start. And then once that actually happens, this is when your due diligence period begins. So due diligence is basically exactly what it sounds like. It's due diligence, where due diligence is where you start the process for doing your home inspections and having a survey done. You're just doing your homework and figuring out every possible thing that you could about this home that you're going to be purchasing, because it's one of your larger assets in most people's lives, and knowing what you're buying is going to be extremely important. So that was step 6. This process can take a few weeks. Depends on how many specialists you might want to have out there. And like I said, it's a perfect way to get yourself educated on the home. So on the back end side of things, Mark, am I missing anything so far? Do you have
No,
any
I
questions?
mean, this is great. I'm, learning some things as well. So this is good stuff.
Okay, perfect, perfect. Well, step number 7. So this is when we start applying for the mortgage and knowing who's gonna lend your money. So already having that pre-approval at the beginning of the process, like I said, you have your ducks in a row. You know who you're going to be using. So and having your pre-approval done correctly and submitting in some of your paperwork already, you have a strong understanding, and it makes of what if you're whether or not you're going to be able to afford this home, because the lender is going to ask you some preliminary questions to make sure well, this is actually something that you have a really high chance of getting approved for. Now, Mark, I want to stop for a second before I move forward. If you don't mind, just explain, because some people, they think the pre-approval letter might mean that I'm actually, like, I'm okay to buy this house, and once you go under contract, something may change. And a pre-approval letter is exactly what it sounds. It's a pre-approval letter. Like, it's not meaning that you're actually approved. So that way, once you go under contract, you're bound to close. You know what I'm saying? Because
Yeah.
once you go under contract, there's some other things that may happen. But I just want to make that clear, so when people get that, they kind of they know a little bit of the difference.
Yeah. So, when I give them the pre-approval letter, that what that means is I've reviewed their income, their assets, their credit, make sure that, it fits the guidelines, okay, for that particular loan program that we've chosen. And so I have what they call an automated underwriting system. And so I run it through the automated underwriting system. Normally it'll come back, it'll say approved, eligible. And so once you're under contract, though, then what I'm going to do is, like I said, we'll submit it into underwriting. And like I said, we'll get that approval back pretty quick. But what happens is the underwriter, we send everything to the underwriter to verify that I put everything in the system correctly. And
Okay.
so, they do a little more due diligence and kind of, do a little more, digging. But, again, there is a process where it does go through underwriting. They do review your bank statements. They do review your income documentation, your credit. They look at everything. And then what will happen is we will get an approval, okay,
Right.
from the underwriter. Once we have that, normally then we're waiting on an appraisal to come back, and that's to determine what the value of the property is. The other thing we're waiting on normally is title work from the attorney. Title work just means that, the ownership of the property, over the past years have transferred properly. And there's no, what we would call defects on the title, meaning maybe there's an heir or somebody that thinks they still own part of that home or something like that. But we want to make sure that when you receive that home, it is your home. And so that's actually the attorney's job to do that piece of
Yep.
it. But yeah, so that's kind of the process that we go through. But once we have your appraisal, title work, we resubmit everything back into underwriting. And then we get what we call your clear to close. And that means we're done with underwriting. Then what happens from there, it goes off to the closing department. They prepare what they call a closing package. And that's actually gets sent over to the attorney. And then the attorney will go through that information with you at the closing table. And it's going to be your loan documents that you're basically signing.
Right.
The other thing, Ethan, if it's okay, I wanted to talk about,
Yeah.
you know, right now rates are, kind of gone up on us, and they're trending down though. And so, we actually have a refinance program for our clients. And so one of the things Movement Mortgage does is we retain our loans, we don't sell them. And so what would happen is that, we know rates are coming down. And so we can refinance this person. So we would do the loan now. So kind of think about you're dating the interest rate for now. Okay.
Okay.
And so if they refinance by December 31st, 2024, we won't charge them any fees, any lender fees, I should say.
Oh,
And
wow.
so, so that's a huge savings. And so, normally when I'm talking to people, I'll kind of show them what their current interest rate is, what the payment is based on that. And then I would show them kind of where we're projecting interest rates to be, between now and, the end of the year. And I'll show them that information as well, kind of show them what their payment would look like. And of course, we can, with that special refinance program, we can, save them a bunch of money, when we go in and lower the interest rate, lower their payment. The other thing we have also to help them, during that period of time, and I know I've spoken to you, Ethan, about it, but it's called a 2-1 buy down. And
Yeah.
so,
Yeah.
and it's a great product. And so what we can do is when you're making an offer, to the seller, you could ask them for, a certain amount of money, not always, but, sometimes the seller could do that or will do that. But it just depends on how long the house has been on the market and just, different things.
Yeah.
And so, but a 2-1 buy down, the way that works is that, let's say the interest rate is 6.5 right now. And
Right.
so what we're doing is we're temporarily buying the interest rate down, or the seller, as I should say. And so the interest rate for the first year would be 4.5. And then at the end of that year, it would go to 5.5 in the second year. And then in the third year, it would go to 6.5, and it would stay 6.5 the remaining terms of the loan. And so it's a great way to, kind of, buffer these little higher rates that we currently have right now and kind of get somebody in a house, but enjoy the lower payment, the lower rates.
Okay.
And again, that's a seller thing where they would pay for that.
Yeah. No, I mean, it's good. I mean, especially for some of those people that are still waiting for interest rates to drop back down from to 3%, which recently, Gary Keller, the owner of Keller Williams, he recently came in, and it's something I agree with. And he said, we in our lifetimes, we may never see 3% or lower again, anything lower than 3%. Now, Mark, if you got any different opinions on that, I mean, by all means, tell me. But yeah, no, for a lot of people, they're waiting until they, something like that ever happens again. But really, if you look at it over time, interest rates, if you're doing under 6%, you got a pretty good interest rate. And 6% is kind of normal, more so than people got used to, and to the 2.8s, and I forgot the how low it actually went, but the 3%, that was a historically low interest rate that happened like back in when even was that? I'm getting my years mixed up right now.
No, I mean, in 2020, I mean, I remember
That's right.
people, were getting in the, mid twos. And
Yeah.
so, but yeah, so you're exactly right. I mean, over like the last 40 years, I mean, if you look at the average, what rates have been, I mean, you're looking, around 6.5, you're right.
Yeah.
And so, it's all perspective. Again, I know that there's different things with regarding our economy, and it can kind of get a little technical, but we are seeing some things where rates will go back, definitely go back down. I'm not sure if they'll go back down to where they were, but I honestly think that we'll see probably low fives. Maybe we might even go in the fours. It just depends on certain things. But inflation is what really kills mortgage rates. That's the reason rates have gone up. And so, that's the key thing right now, is them to get that inflation under control. Once we see that, we'll see mortgage rates come down.
Right. And one of the, I made a video on this recently, and it was just talking about when is the right time to buy a home. And, you can wait for it to be a buyer's market. It could be a seller's market. Demand is going to be up, supply is going to be high. You never know what's going to happen in the real estate market. But really, to answer the question of when's the right time to buy a home, in my opinion, the right time to buy a home is when you find the home that you want to buy. Because if say, interest rates could be high at the moment, but you could come back and if you say, like Mark, what she was talking about, you can refinance before December of 2024. If interest rates come lower and you'd like to do that before then feel free to refinance. And but yeah, when you find the home that you really want to buy and you're trying to debate, the way the market is, if I wait a few more years, maybe I can get a little bit more. But you also got to think the homes that you could be buying a few years down the road, they're going to be costing a little bit more too. So the right time to buy, ultimately, when you find the homes that you really want to buy, or some people that are going through different transitions in life, either you're getting married, is something happy, or unfortunately, if you are getting divorced, and all those life transitions where you may be getting a new job in a new area, there are certain circumstances where you are going to be needing to move. But if you're in a position where you're just like trying to wait and see what the market's going to do, just base it off of when you find a home that you find that suits you and your needs. Maybe you want to be you want me to keep you on a property search, and that way I can keep my eyes open and see what's coming on the market. If there is something that's perfect for you, then I can send it over to you, and you can be like, okay, well, we really like this house, and let's maybe start looking and go talk to Mark and get pre-approved and start that process. And yeah, no, I ultimately, back to my question, thinking of the right time to buy or sell, it's just when it happens, it happens. Don't wait on the market to go down. Don't wait on it to go up. Some people may do that, and if you're an investor, you might want to look into that a little bit more. But there are certain circumstances where if you're buying a place for yourself, that would just be my recommendation.
Yeah, Ethan, no, you're 100% correct. I mean, what I would say, there's a cost of waiting. They're 100%. And so, if you wait, if you have a $300,000 home, appreciation on homes, the average, over, like the last 30 years, I would say, is like 4.5. And so, if you took a $300,000 home, and just after a year of appreciation, you're looking at the $300,000 home. So that's what, $313,000.
Right.
And so if you wait, instead of being 300,000, the house is costing 313.
Right.
And so, for sure, there is definitely a cost of waiting.
Awesome. Well, I'm going to transition just a little bit. I know we've talked about the home buying process, and Mark kind of finished off my home buyer's guide where he was talking about getting the clear to close, and then you move on, and then you're going to start scheduling a closing date, and then after that, I mean, basically you're just celebrating. Mark and I, what we'll do typically, when we close on a transaction, we'll throw you a home warming party, so you can invite your friends and family to, and that way you can have that celebration. But I wanted to transition just a little bit and just start opening up for some Q&A, just in case if anyone's got any questions. Like I said, if you're watching the recording, you can leave comments afterwards, and that way we can comment back to them and answer your questions, or we may be answering those in a video form. We may hop back on and do this again sometime, but just wanted to open this up real quick and just see if there's any questions. All right.
I have a question.
Okay.
So I don't know if y'all already explained this, but in the pre-approval part, is there like a deadline? Let's say if there is a deadline, will it like hurt your credit if you like reapply for a pre-approval to get a home or anything?
Desmond, that's a great question. What I would tell you is that, when we pull your credit report, it is actually good for 120 days. And so we have plenty of time for you to, that's how long the pre-approval is good for. So, I mean, you have plenty of time. Will it affect your credit? I mean, it could. And what I would tell you that, that is a question I get often, and it's probably something I should have spoke about earlier, is, about credit pulls. And so, if you, and so what happens is if, in the past 90 days, if you've had a lot of inquiries, on your credit report, and we pull it, yeah, it could lower your scores. Me personally, I actually, bought a house a couple of years ago, and I was just kind of doing a little test on myself. And so, I was able to pull my mortgage credit scores, and I, looked at what they were, because when I pull them, as a consumer, not as a loan officer, it doesn't affect your scores. So you can pull your own scores. It's not going to affect them. And so, I actually did that. And then I had someone, a mortgage company, Movement Mortgage, pull, but I had another loan officer pull my credit for me just to see if it would affect my credit. And it didn't affect my credit. But I didn't have any inquiries though, on my credit report, in the past 90 days. And so, again, it just depends on the individual. But, I've been doing this, like I said, 31 years, and it normally doesn't affect it unless you've had a lot of inquiries. What it does though is when you pull your credit, it is notated as a mortgage, like if I pull it, okay? And so it opens up a window. And so it gives you basically 14 days where you can have other lenders pull your credit report, and it's not going to affect your scores, okay? If it's going to affect your scores, it's going to be the first person that pulls your score. It opens up, like I said, you have a 14-day window. If you go past that 14 days, it can affect it, but it gives you another 14 days. So I normally, what I would tell you is, it's like 28 days. You can have people look at your credit. But again, it's only people that are pulling a mortgage credit report. Because if they're pulling, for autos or credit cards, they're notated as that, and those will affect your score every time. But on a mortgage, it won't affect your score. The only time it will happen is the first time, if it's going to affect your scores.
Thank you.
You're welcome, Desmond.
Mark, I had a quick question. Now, I have people all the time that reach out to me, and they're wanting to purchase like a new construction home. Is there any specific programs just for new construction, or is there like is it just the same conventional financing that you would typically go through, or is there anything special that they can do if it's new construction specifically?
So, I mean, new construction, and so it just depends on if they need a construction loan, or
Okay.
do they just need the permanent financing. And so, depending on the builder they're working with, they might only need the permanent financing. Okay. And so in that situation, when it comes to interest rates, we do what we call an extended rate lock. And that, again, that's it's a great option. Now, there's a cost to do that, but if we see rates are kind of going up, we probably want to do an extended lock. But if we see the trend where rates are kind of coming down, we probably wouldn't do an extended lock. We would just wait until we're like 90 days from closing and then just lock the interest rate in. Yeah, but again, if it's a construction loan, buying a house from a builder where they need the construction piece, yeah, that's a different animal. Yeah, and then
Okay.
we would help them through that too.
Right. Well, one last question. Desmond, did you have anything else you'd like to ask, or just wanted to double check with you?
Okay, I do have one more question, but I don't know if it. Okay, I'm just gonna ask it. So, when you're looking at some of the programs that that you have to offer for first time buyers, does it matter what house you get, or you can buy any house with those programs?
So, I mean, generally you can buy any home with those programs. I would say that with regarding like VA loans and your FHA loans, when we do the appraisal, there is an element of a home inspection. It is not a home inspection though. And so, if you have a house that you're trying to buy that needs a lot of work to be done to that house, and there's a lot of repairs and stuff like that, we probably don't want to do an FHA loan or a VA loan. We would just want to do a conventional loan. But again, if for some reason we need to do an FHA loan or a VA loan, at that point, what we would do is we would do a renovation loan. Okay. And a renovation loan is where, we're going to give you a certain amount of money to get the house fixed. So if the bathroom needs to be remodeled, or the kitchen needs to be remodeled, or, there's issues on the outside of the house, maybe a new roof or whatever, in order to get it, things up to par, that's a renovation loan. That's something we can do too.
Awesome. Basically, what I'm ultimately hearing is there's a type of loan for just about anyone that's looking to do anything. And if it's out there, if there's a home that you want, I'm sure you can find some sort of way to finance for it. Sometimes it might be a ridiculous high interest rate if things aren't working out. But no matter what, I think there's something out there for everyone, no matter what stage you're at in life. And there's credit building options and things like that. We can probably have a whole nother conversation about that. But ultimately, I know we're getting close to almost 45 minutes here. So just wanted to ask Mark, how can the good people out there get in touch with you and reach out?
Yeah, so my website is mortgagemadeeasy.com, and my cell phone number is 704-996-2079. So just you can call me, text me. But yeah.
Sounds great. And my name's Ethan Wallace. I'm with Realty One Group, and I'm always happy to help you with any of your real estate needs. You can reach me. My number is 828-748-1620. And yeah, we look forward to connecting, and we're here to help you with anything you got. So thanks everyone for hopping on today, and I'll let everyone go, but yeah, look forward to the next one.
Thank you, Desmond. Thank you, Ethan. Enjoyed it.
Thank you.
Yeah, bye.
Thank you. Bye.